As we grow, we started realizing the value and importance of money more in our lives. And in today's video, I bring to you this amazing book called Let's Make Money by Monika Halan. So, in this book, the author highlights the importance of financial literacy, especially on personal finance, on how one can manage their personal finance and make a decision wisely. So, if you are someone who is just starting out, or even if you are at the intermediate level, then this book is definitely for you. You should definitely read this once in your lifetime.
I got this book 2 years ago, though my investment journey started 2 years before getting this book. However, I felt that after reading this book, it has been an eye opener. There were many things which I didn't know and which I didn't care. However, after reading this book, I felt that those were one of the most important thing maybe which we need in our life, and everyone actually need those, such as medical insurance, right? And so there are many things. So we will come across those things one by one. And one good thing about this book is that it is written in a very simple and layman terms, so you don't have to worry about the jargons, you don't have to worry about the financial or technical term, because it is very simple that any layman can understand.
That you need to have three types of account. So the first account is earning account, or also called as a salary account. So the second account is called as your expense or expenditure account. So in this expenditure account, whatever transaction that you make should go out from this account. And the third account is called as a savings account. So from the savings account, you are not allowed to take out any money or do any transaction. However, you can only deposit, and the deposit should be at least 10% from your income or 10% of your earning. So if you are independent and you don't have any dependent, then you can contribute more than 10%, but 10% is the least that you can deposit in that account. So those are the three types of account that you need for your cash flow. The second point is emergency funds. So emergency funds are those funds where you can easily take the money out from during the time of emergency. Ideally, there should be no waiting period. However, the author suggests that if those money can be taken out within 10 days, then those money can be called as emergency fund. The author also suggests that the emergency fund should be three times of your income. For example, if you are earning 10,000, then your emergency fund should be 30,000. So this is how the emergency fund should be, and until and unless you don't need those emergency fund, you should not take them out. And the third point that the author talks about is the medical fund. So medical fund should be either your health insurance or your health cover, but it's very important that you get yourself one. You can either choose to have a separate or a joint medical insurance along with your family member. We know that healthcare these days are very costly, right? Especially if you get yourself treated in one of those reputed hospitals, you might just end up spending half of your savings or your entire savings, especially if you come from a middle class family. And which is why doctors keep on saying that health is wealth. They keep on emphasizing on the phrase that health is wealth, reason being that, when there is health, only then you can have wealth, right? But if your healthcare condition is not good, then it will not affect individually, but collectively, even the people around you, your family members, will also be affected, and that will affect the entire financial stability of the family. Especially if you are from middle class family, then even getting yourself admitted or enrolled in the reputed hospital is a long distant dream for a middle class family. But the only way to get yourself treated in one of those hospitals is by your health insurance, because many of the health insurance tie up with these reputed hospitals. So that is one way for you to avail your a healthcare facility from one of those hospitals. So according to author, there are mainly three things that you need to look at while availing health insurance for you. So there are many organizations and companies which sells medical insurance, and it is very important that you go through the policies in thorough before availing them. And also, one important tip that I'll share with you is that whenever you are buying any health insurance, please remember that you ask this to your agent, that whether or not they have any other hidden terms and condition apart from what is being shown to you, because many a times these policies are not very crystal clear. It's not really like what is shown, so there are many things which might be hidden, or they might not want to share it with you apart from the things that are there. So it's very important that you also come out smart and speak to them about this. And according to author, there are mainly three things that you need to look at while availing a healthcare policy. So the first thing is that you need to look at is your premium, which is very important. This is going to be the amount or the price that you will be paying annually to your healthcare insurance. So the premium, it will vary from a lower to higher price. That will depend on your budget, on also the kind of health insurance that you want, or the facilities that you want in your health insurance. So the second point that the author talks about is the claim rate. So according to author, the author suggests that you look for an insurance with an effective claim rate, and this is very important. So what does claim rate means? Claim rate are how effective the company is when you are claiming, right? When you're claiming the health insurance. For the third point is that on whether or not your health insurance cover the existing disease that you have. For example, if you are someone who have crossed 35, then you might have a certain existing disease. It can be a diabetic, a cataract, it can be many other disease, right? So before availing your health insurance, you have to ensure, or you have to ask whether or not they will cover under your existing disease, because many a times they don't cover your existing disease. So those are the three things that you need to look at before availing your health insurance. So far, while planning our financial journey, we have allocated our salary at different funding banks. Some of it we have kept in our salary account, some of that we have purchased a medical insurance, some of that we have purchased and we have kept it for our emergency fund. Now, after keeping all this, imagine that you still have some money left. So what you will do with that money? So now we will be coming to our investment part. So this will be the second part of the book that the author speaks about. So in the second part, the author talks about investment. So investment, according to author, there are two kinds of investment. One is called the financial asset, and the other one is called the real asset. So the financial asset cover the debt fund and the equity fund. So the debt fund are those with low risk and low return, and those can be called as FD or your PF, provident fund, or the fixed deposit, which you can say. And equity are those where you invest your money in stock market or mutual fund. So the in equity you will get higher return, but also there are higher risks. So that is the difference between a debt fund and equity fund. Now coming to the other part of the investment, that is called as the real assets. So now what is real assets? So according to author, real asset is divided into two parts. One is called the gold and the other one is called real estate. So according to author, gold is a good investment because it does not affect much even during inflation, and gold is a good investment only if you purchase a gold bar or a gold coin, rather than purchasing a jewelry. Because what happens is when you get a jewelry, the making charge, they charge for the making as well, right? So that goes to around 30% of making charges. So you might end up spending 30% of your money in making charges, which is why the author suggests that it's better that you get a gold coin or a bar. And apart from that, if you also want to invest in bond, you can get a gold bond by government, so that is much more safer for you. And the other investment here the author talk about in real assets is the real estate. So according to author, real estate is not a very good investment because it will cost a lot, because you will also have to do the registration of the asset that you bought, and then sometimes during the inflation it might affect, and which is the reason why if you don't have the knowledge of certain things, don't just invest your money in that, and real assets can be tricky. By the end of the book, the author also suggests that we set the will in place beforehand. We know that death is very uncertain. However, if we prepare everything beforehand, it will save our family from trouble and also from all the legalities that it involve, and that you can also pass on your property or your assets to the rightful heir that you want. So that is how the book ends. I will also leave the link of the book in the description box below. In case you want to get yourself one, then you can click on the link and get it from Amazon. And that's all for this video.